Is Hershey stock a bargain right now? It is down 20% over the last year and currently trades towards its 52-week lows. Now, there are some issues that we are going to discuss, but is there some incredible opportunity to buy this company that could be very undervalued? We're going to look, as always, at the numbers. We have the December 2023 numbers, so we want to see their top line as well as their bottom line net income growth over the last few years. We'll also consider the health of the company, their total cash versus their total debt. We'll analyze how they've performed over the last few years versus some of their competitors. And we'll talk about some insider selling that we have noted over the last week. And a very big discussion now on the institutions. They have been making some very big movements, and it wouldn't be fair to talk about Hershey without discussing the cocoa prices, which are looking at record highs in 2024. And as always, we'll look at that dividend safety. We'll also look at some of the very strong financial metrics that this company has. And we'll take one or two slides from their latest investor presentation to bring you up to speed with some information that may be new to you as a shareholder or potential shareholder. And as always, we'll run them into that valuation model. We want to find the intrinsic value, get to that acceptable buy price given the investor margin of safety, and see what Wall Street are forecasting for the next 12 months. So let's take a look at the Hershey company, now down 20% over the last year, but if this is one you have been holding over the last 10 years, you would be up 81%. Again, bear in mind, doesn't include dividends reinvested, and we see its all-time highs at around the $275 mark nearly 1 year ago today. Not too far off the 52-week low, does have a yield of 2.84%, and we see now a forward PE bang on the 20 mark. Now, in terms of the numbers, what we want to see is around 3 to 7% growth year on year, and we do understand with Hershey, which we'll cover shortly, the issues they are facing with the increase in cocoa prices. Around $8 billion on their top line in December 2019. December 2023, we can see $11 billion. So around 40% growth to their top line over the last 5 years. And what I do quite like to see is on the granular level increases every single year to their top line. So overall positive, but we will look at the percentages exactly over the last 10 years, in fact, very shortly. Now looking at Hershey's bottom line net income, we see $1.1 billion reported in 2019. Latest annual report, December 23, $1.9 billion. So we can see their bottom line, similar to the top line, has increased over the last 5 years, and in fact on a more granular level we also see increases every single year, so it is positive to note both top line and bottom line are increasing. Quick health check then, $490 million worth of cash and short-term investments in 2019. Latest annual report, $402 million, so they have got a little bit less cash than they did 5 years ago. Not a real red flag indicator, but let's take a quick look at the total debt numerically and directionally. We can see it is relatively small in 2019, $4.5 billion, and we can see in that latest report, $5.1. So it has increased, but very marginally, and we do see the cash decrease. So no real cause for concern, but in reality, we will take a further look and focus our attention on that net debt to EBITDA metric. Now, in this industry, we have the packaged foods and meats, we have General Mills, we have Danone, Kraft Heinz, as well as a few others. We can see over the last 5 years, in fact, Hershey is up around 91%. It is, in fact, the best performing over this period. And we do note that there are a few that haven't performed that well. We have Danone here around flat over the 5 years. We have Tyson Food, in fact, down 4%. And we have HSY up around 5%. So it is one of the best performing in the industry over the last 5 years. But again, past performance isn't an indicator of future return. And we can see when we bring it down to just the last 12 months, they are in fact one of the worst performing. So understand all this different information. Whilst they are looking very strong on a 5-year basis, over the last 12 months, they have in fact been the worst performing, and that does include those dividends reinvested. Now, insider selling, as always, buys and sells. What we can note here is that the SVP and CFO, Stephen V, has sold around 1,500 shares at a price of $193, so pretty much the current trading price. 23rd of February, so not too long ago, around, or in fact just under $300,000. All I would say, we want to be transparent. We want to show both insider buys and sells where we can, but do remember that insider selling isn't necessarily a bearish signal, and insiders sell for many reasons. So institutional ownership, 56%. Now this information is new, so it did catch me a little bit by surprise when I did see it. 14 billion worth of sales by these institutions over the last 12 months, with 5 billion worth of buys over the same period. So in actual fact, we can see for Hershey that the institutions have sold more than they have bought over the last 12 months. And lo and behold, we see the largest sell, a very significant amount in quarter four, 11 billion versus 900 million worth of buys. So we can see, in my opinion, the institutions are starting to believe that the cocoa prices are going to be increasing at a rapid rate, or they aren't going to come down that much over the next few years, and therefore they look to be selling a fair amount. Again, this is institutions, they change quarter on quarter. We can see Q1, Q2, they were buying more than they were selling. So again, bear that in mind, they do change their buys and sells quite frequently. One level or one layer, in fact, of our analysis, and always take this with a pinch of salt and always do your own due diligence. Now, before we do take a look at the metrics, we just want to have an article from a few weeks ago discussing how chocolate prices are likely to remain at a record high for 2024. And this is probably the largest culprit for Hershey's as to why essentially the share price has been decreasing. We can see, in fact, it was at a high of $277 not too long ago in under a year, and it has come crashing down since then. So this is vitally important, something just to understand when you are trying to figure out, one, why this company has fallen from a high not too long ago, and two, if this is a company you're interested in adding, to factor that into your margin of safety that we will discuss shortly. So a few factors to consider here. Firstly, a report from the ingredient supplier Henley Bridge. They have warned that cocoa prices increases of 15 to 20% for the first half of 2024 may continue into the second half of the year. Now remember, this is one of the essential ingredients that Hershey uses in their products. So what that means is when we do take a look at the income statement, this will effectively be their cost of their revenue, and these will increase, really affecting their gross profit margin. So the higher this is, the lower their gross profit will be, and it will in return affect their bottom line net income, and that will in turn then affect the amount that is distributed to the shareholders via dividends. Now, a few things just to note. Now, despite the growth in this supply in 2021, due to the fact that we saw unfavorable weather conditions and demand from emerging markets increasing, we have led to supply deficits. And something that is really incredible, we can see that the raw cocoa prices have reached a record high of £4,700 per tonne, and that is more than double than it was around a year ago. So these are lots of different factors to increase, and you'll understand why we are talking about this when we come to that valuation and the effect it has. Now, before we jump into this dividend safety, let's just show you one of the essential slides from their latest investor presentation. We can see that for the confectionaries, they have had some accelerated growth, plus 7.6% compounded annual growth to their top line over the last 5 years. Very positive. They've also added a growth platform, which is around 10% now, the salty snacks. So 10% of that 2023 revenue. We can take a quick look at some of their new products, and we can see they've also strengthened that on an international basis with sales up 5.7%. Now we can see they have a more diversified portfolio. They have brought in both the skinny popcorn as well as the Dots pretzels. Let me know in the comments if you have tried any of these and if they are actually that good. Does look like they are quite popular given the fact that they are essentially within the top 10 of their portfolio. Number 1, Reese's. Number 2, Hershey's. And we have Kit Kat, Icebreakers, Kisses, and those other popular products. Also, just to let you know, we are releasing another free weekly article tomorrow. It's going to be on a very, very popular topic. If you want to gain access to any of our articles over the last few weeks, all completely free, do click on that pinned comment below. So Hershey, dividend safety score 93, very safe. Market cap 39.3 billion. It is a large cap company. Key metrics then, well, they maintained the dividend during the last recession. They had above average growth, pretty much flat versus the S&P's negative 12%. And on top of that, they outperformed the S&P negative 30% return versus the S&P's negative 55%. Dividend growth, this is one thing I do love about this company. Double-digit increase to the dividend just last month. Double-digit increase over the last 5 years. 10% over the last 20 years. Very, very strong. And they have not only been increasing those dividends for the last 14 years, but not sure if you knew they were paying dividends for 94 years without a reduction, which is very incredible to know. Now, dividend yield theory, we can see that undervaluation signal, 2.85 yield, one of the highest it has offered, if not the highest over the last 5 years, versus that rolling 5-year average of 2.03. Forward P sitting now at 20 versus that 5-year average 24.3, a double undervaluation signal, and we can see it is pretty much bang in line with the consumer staples sector PE. But remember, we're not looking at any of these models in isolation and conclude towards the end. Free cash flow payout, below 70% is what we look at for consumer staples. I personally use a blanket 60% rule. Really comes down to the individual investor's preference. We can see it is in fact below 60% for the majority of the last 10 years. 2023 at 59%, 2024 expected 63%, so still pretty decent. I would expect even next year, unless there is something dramatic to happen, another double-digit increase to the dividend for Hershey. Free cash flow per growth, also very strong, growing from 213 in 2014 to 758. So again, whilst it's not massively consistent, we are seeing growth over that long term. 2024 expected to increase to 865. Sales growth, now we mentioned we'll look at it in percentage format, and we do like steady moderate growth around the 3 to 7% level. Last few years looking very strong, if not at the upper end of that. 21-22 showing us double-digit increases to their top line, so looking very positive in relation to their sales. Now numerically we can see it has gone up around 50% over the last 10 years, from 7 billion to around 11. Now, Hershey also returned excess cash to investors. They do share buybacks. As we can see, they've bought back 225 million outstanding in 2014 to 206 in that latest report. So this is a bonus to the investors, essentially increasing the share of the pie that you have of the company. ROIC, now whilst it is decreasing or has decreased over the last few years, it has been consistently in the mid-20s. I love to see that. Personally, I look for a minimum of 10% just to keep essentially giving me faith that management are able to effectively allocate that capital. Margins very strongly. It has in fact been increasing over the last few years. That operational efficiency is looking good. And while some people are concerned about the increase in cocoa prices, how will it affect their margins? Well, on the operating side, it has in fact been increasing over the last 10 years, even though we heard that cocoa prices doubled just from last year. Again, something to keep an eye on. Just because it has been pretty strong over the last few years, it doesn't mean by any accord that it is going to continue to be the same. Free cash flow margin as well, very strong, 14% in the more recent year, and that is above that 7% we do look for and anticipate for consumer staples. Net debt to EBITDA, earnings before interest, tax, depreciation, amortization. For those that are new, this effectively signals two things and correlates to the dividend safety and balance sheet strength. 1.49 in 2023, very strong, well below the 4 that we look for consumer staples. Expected to be pretty flat into 2024, so this is a very positive sign in my opinion. No issues to that dividend and no essential issues with the balance sheet, which we did also review. And then for those that are new, essentially these numbers show us the number of years it would take the company to pay off all of their debt net of cash on hand. So let's jump into the valuation model. As always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. So we have the first model, multiples valuation. We have the PEs of these companies in a similar sector and size. The average PE multiplied by the EPS of Hershey to get an intrinsic value of $206. So we have that first signal of undervaluation. Do keep in mind that we're not looking at any of these in isolation. We then have the dividend discount model, the growth rate year on year, as we can see, on average 12%. Now we have gone significantly more conservative at 5.5%. This gives an intrinsic value of $231, a second signal of undervaluation. We then have the discounted cash flow model with the free cash flows year on year. Average growth rate at just under 18%. We've gone for what we believe to be fairly conservative, 10% over forward looking. With that discount rate, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by shares outstanding, and we have a third signal of undervaluation. So let's take a look. In today's episode, the intrinsic value is just the average of these three models, coming to $220. Now, bear in mind, you can grab a copy of this valuation model if you want to get to the intrinsic value, as well as the acceptable buy price of companies in your own portfolio, or even those on your watch list, or even if you want to run through Hershey but change your estimates to get your own value yourself. Margin of safety then, as always, remember 10%, 3 criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that with Hershey, it is a buy up to $198. At 15%, we can see it isn't quite there yet at $187. So it really comes down and depends on what margin of safety you're looking for. At 20%, we can see a buy up to 176. Now, personally, I would say around 15% is a fair enough margin of safety for Hershey. It was one, in fact, I was buying at the low 180s. Right now at 193, it doesn't, in my opinion, signal a very strong buy now. I will keep an eye on it. If it does tend to go back down to the low 180s or high 170s, I will continue to add to my position. In terms of Wall Street and their thoughts over the next 12 months, well, they have a price target of $210. It is one that they did, in fact, lower before. It was around the $220 to $230 mark. They have reduced it now, but they still see upside of around 9%. As always, let me know your thoughts in the comments below. Is Hershey one you've been adding to? One maybe you will add if you see a larger drop, or for whatever reason you feel that, for example, Mr. Beast is going to come over and take Hershey's market share. As always, if you enjoyed today's episode, smash that like button, hit that subscribe and bell button, and as always, we'll see you on the next one.